Good afternoon again, everyone. My name is Stephanie Foster. I'm the Managing Director of the ThinkTECH Accelerator at the ICBA, Independent Community Bankers of America. Welcome to our Banking Innovation Track, which is sponsored by Sensedia. I will serve as your MC for the next 3 hours, so I hope y'all will stick with me. I'm also moderating our very first panel of the afternoon. Thank you. So our first panel is going to be all about banking and fintech partnerships. And today we have 4 amazing panelists who are joining us from the banking side and also from the fintech side. So we're just going to go ahead and dive right in. All right, so I will allow each panelist to formally introduce themselves and tell us who they are and what they do before we enter into questioning. So we're going to start with the first person on my left.
Awesome. Thanks, Stephanie. I'm Matt Pierce. I'm the founder and CEO of Immediate. We're headquartered in Birmingham, have offices here in Alpharetta.
Julie Offen, and I'm the Global Business to Consumer Payments for JPMorgan.
Christina, Russ, I lead strategic investment initiatives for Truist Ventures. We invest in opportunities that bring surprise and delight to financial services. Those are both direct and indirect opportunities. We also act as a thought partner to leaders across the bank on their build by partner strategy and manage the strategic relationships between our portfolio and the bank.
And Brandon Horne, GM of Strategic Partnerships at Greenlight Financial Technology. We're a parent-to-you financial literacy company that shines light on the world of finance for parents and kids.
All right, awesome. So before we dive right in, I always look at partnerships like dating, right? There's a courting process. You have to get to know each other. There's a due diligence process involved in all that, negotiation before you actually start the relationship and the ring and get married, right? So I'm really curious, and I'd love to hear from each of you from the banking side and also from the fintech side. What was that courting process like? Who courted who?
Broadly, I would say with partnerships, we at the bank feel very strongly about building an open innovation ecosystem. Innovation isn't just one person's job, it's really everyone's job, and so building a culture where everyone feels empowered to participate in that. And so we have many people across the bank who are, out in market all the time, looking for interesting opportunities. And part of our role is to make people aware of what the opportunities are and bring those into the bank, and then equally listening to what people are finding and seeing what partners they can bring to the table, and then evaluating their relationship from there. So I feel like a lot of our work is reporting, and then over time that funnel works down into where something can be mutually beneficial, but very much focused on helping to build a culture of innovation that allows everyone to participate in kind of that partnership source.
I'll take it. Yeah, we obviously did not rehearse this extensively. I would say it feels like we're probably doing the courting. As an early stage fintech, even a mid-stage growth company, the scale, the trust, the access to capital, all of those things that kind of come with a medium, large size financial institution are really attractive. And so, the vast majority of my experience has been in the courting process, and we can talk a little bit about the future, but it's finding people like Christina as gateways into organization that you can then network through people as a part of that innovation ecosystem, because a lot of this stuff is by committee. It's not a single point of entry, but you need that person to help shepherd you through the organization and the processes that are delivered in partnership with them.
First off, I appreciate the analogy of the culture. I have a lot of experience being dumped personally, and so that has boded me well for my professional career. You get a lot of no's when you're trying to build partnerships, so that analogy is great. I do think, kind of to Brandon's point, as a early stage company, in a lot of cases, you're kind of the pursuer, and it's hard to match up timelines, right? I actually looked earlier today in preparation for this. October 2020, the kind of full circle moment. October 2020, we did a pitch competition as part of a virtual Fintech South. And there was a guest judge. We didn't win.
Their loss.
So, but there was a judge who asked really, really good questions. And I sent him a note on LinkedIn afterwards, and I just said, hey, can I just say, not to say that the others didn't ask good questions, this one person in particular was really good. And I just said, can I just say thank you for like being engaged and asking good, deep questions? It seems like you really are trying to understand to make a good decision on who you're learning. He said, absolutely. And I said, can we get together and have coffee sometime? And that person was a commercial banker at JPMorgan. And it kind of started this relationship that continued to grow and evolve into kind of where we are today. And so I do feel like, as to Brandon's point, like when you're trying to court strategic partnerships, it's going to take a lot of effort and energy, and it's gonna you got to think about the long-term time horizon, and they're very similar to dating, right? To take that time and put that effort and energy into it and trust the process.
So what's the answer? Who courted whom?
I would say we very much courted JPMorgan, and then we found ourselves in a really good timing, which is another thing. I think as an entrepreneur, timing can be one of the most important aspects and pieces of the puzzle, and it's the one of a handful of things that you just simply can't control, right? And we just had the good fortune of meeting this organization, and I would say probably a year and a half ago, I saw an article about one of our competitors partnering with a major financial institution, and I sent an email with that link to Kale and Tab at JPMorgan and said, who should we talk to do something similar? And it started the process, and then the good timing was that there was a process going on that we got to be a part of.
That's awesome. Thank you for sharing. Let's see. So we have two different types of relationships here on the panel. There is an investor fintech relationship, and there's a commercial relationship as well. So I'm going to ask Brandon from Greenlight. Truist is an investor in Greenlight, right? It's a different type of relationship. Would you mind telling us what are the benefits of having a large bank on your cap table as a fintech?
Yeah, sure. Actually, they're both effective, thankfully. But yeah, to the point around how do you navigate these massive institutions that many times have process that are quarters or years long. There's reorgs that are happening ever so often, etc. Like there's something to be said for just always being there, and then there's something else to be said of who is that advocate internally going to be. Yeah, you might need to reach a senior executive to get that final stamp of approval, but more often than not, kind of what we found is there's someone that in an operational role that really latches on and is invested in you for whatever reason, because they think it's a cool idea, because they thought you were made a really interesting investment hypothesis. And when we think about banks on the cap table or financial institutions in general, I'm not only at Greenlight, but in past lives, more often than not, you've now created that mutual relationship with your success and their success is tied, and so there's a vested interest in helping you navigate the people in the process. And when all of those things, the earth under you feels like it's moving all the time because of the reorg or because the prioritization shift, or because you got cut from the, CapEx process that year, you can go back to that person and say, what next, what now, to your point, right? And then you hope that the timing lines up and you meet that right person so that you can actually make something happen.
Thank you, Brendan.
The only thing I would add is that I think there's a couple different ways that some of these investments happen. One is where, and I'm seeing that this increasing trend in the market right now, which is maybe unsurprising given what's happening in the venture and startup market, but a lot of companies coming to banks and saying, we would love to get investment from you, but we also need to have a commercial agreement alongside that. And that's one way to sort of create momentum and encourage things to move. But at the same time, I think the investments and opportunities for partnership that work out long term tend to be the ones that are built over time, where there's not an immediate, you have to do this now and then that's the only way that this is going to move forward. But where you really are building partnership as opposed to just a pure vendor relationship. Because to Brendan's point, things move, everything changes. I mean, the number of times within things that I've worked at that things change week to week, and you're going out and saying something different. But having that advocate and that person who's going to continue to shepherd you through, regardless of what those changes are, is really valuable and important. And building that relationship over time is critical.
Absolutely. And if we could stay a little bit, go ahead.
I've got one additional point. The other one that's just like kind of a seemingly obvious one that I forgot to mention is just trust. You have a large institution with a lot at stake by putting your trust, money, et cetera, behind you. Having the right institution on your cap table does indicate to the market that you're a trusted product that has good product market fit, and that's pretty invaluable for an institution.
I wanted to stay kind of within that realm of investments and fintechs. Curious if you could share with the rest of the group, Christina. Trust is important, obviously, right? But also there is a due diligence process that you go through as an organization and vetting these different fintechs in terms of investment. Would you mind sharing with us what are some of the key things that you look for, anything that pops up as a red flag or anything that comes up and you're like, yes, this is the place where we need to invest our money?
Well, ultimately, in investing of any kind at these stages, really investments in people. You're just investing in people who make decisions, and so the diligence that you do on the individuals that you're investing in, I think, is probably the number one thing that we think about. And obviously, product and market and timing and things like that. But we're very fortunate to have subject matter experts at our fingertips who we can bring into our process and be able to get their eyes and ears on the opportunities and provide really critical insight as we're going through the process. So after we've done sort of an initial, I'll call it screening of an opportunity, and does it fit an investment thesis that we have? Is it within the themes that we're focused on? Does it match to the overall strategy that we're trying to support through our strategic investment activity? Then we pull in SMEs from across the institution to help us work through technical capabilities and all of those things. So it's a pretty exhaustive process. I'm sure that no one who's taken strategic capital would say that it's a super quick process. Ours can take several months to get through, but I'm also very proud that it's an incredibly thorough process. I think we frankly do more diligence for the size checks that we write than most of the big Sand Hill Road firms. And so it's a really thorough process, but we always feel really confident at the end of it that we're making great investments that are going to be adding a lot of value to the institution.
Absolutely. Thank you for that. So again, the big part of partnership evaluations is around due diligence. And I know that Matt and Julie, both of you have maybe a few stories or two to share on what that experience was like from your perspective.
I'll start. So I came into this a little bit later. As Matt stated, he already had a relationship with some commercial bankers at JPMorgan. I am more on the delivery and execution side. So I can speak to the fact that when Matt began his relationship with JPMorgan, we were in the process of looking for entities that met our strategic goal, as Christina was mentioning, for their particular business purpose, right? So we were exploring 50 to 60 different fintechs, and we narrowed it down to 2 to 3, which met our brand. So you mentioned something about a large institution putting their trust in you. it's that trust to be able to put the brand against it, which is one of an institution's most valuable assets. So with that due diligence is very deep. You mentioned looking at the technical, so digging in, understanding how will this experience be for our customers, our JPMorgan customers? What will that tech look like? Is the data safe? So it was really quite extensive. Matt and his team have been champs at sticking through this with us, and I know it's been very thorough, but I've seen this a couple of times now, but this is the first time that I've been involved where we're really looking to productize something with a fintech as opposed to just a referral model. So really great job sticking through on that one. So do you want to give your experience as you were there?
It's I love what I'm hearing like from everybody, because I think what we viewed this as from the very beginning, from the introduction that was made to the FinTech partnership team and kind of what ensued, right? We didn't know at the time that they were looking at 50 or 60 companies. To be really direct, we don't have 50 direct competitors, right? But they did a really broad sweep of the market and said, what is out there that kind of matches what, to her point, what we believe our commercial banking partnerships clients need, and then let's continue to narrow it down. What they did that was really great was they were very forthcoming with their process. We were talking about it yesterday, I think on the drive over, that at one point they said, all right, we've narrowed it down to 8 companies, and by the end of next month we'll narrow it to 4, and then we'll narrow it to 2. And when you talk about investing in companies and it's relational, we felt like as a leadership team, the best way to improve the odds of us being selected is to really invest in that relationship. And so when we knew they were making a cut from 8 to 4, we were like, what can we do to build more relationship? And so surprisingly, we had a week in New York City that had all sorts of other meetings. And we said, when we're there the whole week, when can we get together and meet with some of this team? Because we knew that if we could get an hour or 2 together, that we could start building those relationships. Inside baseball, we didn't have any meetings in Denver. And we waited until, and to, I guess, maybe to call her bluff, this wasn't Julie, we got a note on a Friday afternoon, hey, we're available Tuesday at 3. And so we bought last minute flights and we flew in with them. And we spent 2 hours getting to know this team and sharing our vision for where we thought this would go. And so it really, to me, like, yes, we have to have the right product, we have to have the right team, we have to have all the things to go and succeed. And we know that that's just a part of the diligence, but we felt so strongly, and we want them to understand that we are the right team for them to partner with. And quite frankly, we wanted to make sure that it went both ways, right? We want to make sure that we matched and jived with their team. And this team that we continue to work with has just been incredible. A lot of large organizations aren't super transparent with what a process looks like. And we totally understandable. I've been on the side of the house where I'm a big organization, and you don't have to be, right? But that was really helpful for us as an early stage company that was trying to navigate the waters and know where to invest our time and energy and resources. And it took ballpark 30 meetings before we were told, you're the group for us. So if you could imagine 30, 45 minute to 1 hour meetings, including a couple in person, and like tack on another 30 to 45 minutes prep internal for each one of those. We invested a lot of time and energy. We knew that there was a chance that we could be told no, right? But that was a risk we were willing to take, and I think that one of the things that large financial institutions like Truist and JPMorgan, the thing that they bring to the plate that you're not going to get in a lot of other places is if you take an attitude of, even in the event that we lose this deal, that we don't get this partnership, this diligence is making us better. And that was something that we just tackled early on, and we said, look, we're gonna put our best foot forward, we're gonna do everything we can to win this, and then we're gonna do everything we can to make sure that it's wildly successful. But in the event we don't win, we're still gonna win because it's gonna make us better for the next round of fundraising, or the next time we get in front of a large financial institution or a large HCM company that we can partner with. And so I think just the way that you approach it and structure your attitude and your effort and energy towards a big strategic relationship like this and that diligence process is really key.
Love the positive thinking there.
I just wanted to, I love the point that you actually flew in person to go meet with people, because I think especially post-COVID, don't discount the value of an in-person interaction. There's far too much effort put into like, how many emails can I send? How many video conferences can we have? You are gonna make more progress in a 15-minute in-person meeting with the people that you're trying to build a relationship with than thousands of hours of Zoom. And you're gonna make much more of an impression, especially in big organizations where there may be a lot of people that you can hit, in one afternoon. So I think that's brilliant that you guys took that tact, and really important for others to consider too.
That's a very good point. Never discount the power of that personal touch.
To hit on that really quickly, we just flew a dozen people in from the client, and we decided that we were just going to round robin negotiations for 6.5 hours yesterday. So we locked ourselves in a conference room and we just knocked it out. It would have taken months to do that over Zoom and email and that sort of thing. And at the end of it, we went and had a drink and we had dinner and we all felt good about where we had landed. Whereas over email, you lose context and things like that. It's just like, when your kids or your spouse sends you a text message and someone gets angry about it. It's so hard to convey like the meaning behind what you're trying to say when it's written word, or even when it's on a screen and you can't see someone's entire body language. That's one. On the diligence piece I wanted to touch on, it was interesting that you talked about making you better. I feel very much the same way. I think fintechs also have to go into that kind of process with a willingness of how much they're willing to change or not. The answer might be, this large institution is going to push us to a breaking point or in a direction that we don't want to go, because the level of compliance, diligence, etc. is beyond where we are from a growth stage, from a funding stage, whatever the case may be. And you only learn about that with the transparency. We had a very transparent experience as well, but we've had other institutions that have been wildly untransparent, either because they didn't understand their own process or because they just didn't think to tell us. And so asking those questions up front about what their expectations are going to be to make sure that your timelines align. I'm willing to invest the time. I'm willing to go hire the people that they're going to expect me to have. I'm going to go hire the lawyers to build the process that they're going to expect us to have. Sometimes it's too early, or those timelines don't line up. And I think you have to be honest with yourself of like, yeah, that logo and that revenue sound really good. They can also potentially break you if you don't, make sure that everyone's in alignment to say, yeah, we're going to go tackle this thing, and even if it fails, like we're still further along the path we are already headed.
Can I say one more thing?
Matt has a lot to say.
Yeah, I do have a lot to say. I'm sorry. What I also want to point out is like the knowledge this guy just dropped is because he's done this a lot. He did this at Cardlytics. He did this at Greenlight. So I would be a fool if I didn't reach out to someone like him and talk about the process I'm going through. So I can say it publicly, thank you to Brandon, because when we were going through this process, I reached out, I used connections that I had, I'd never met him before, and this guy took the time for 30 minutes on a Zoom to sit down and I said, hey man, here's some things that we're going through and here's what we're working with. I can't tell you who it is, but I can tell you that it's a company you're partnered with, and I want to make sure that we're structuring the right terms from a business and economics perspective in a partnership that's not going to put our company in a tough spot, and that's also in market, right? And he gave us some direction, right? You can't say this is hard and fast, but you can go, here's some things that we dealt with, here's some things we went through, here's some things that we thought, that we went through. I just think that that's really valuable. So if you're sitting out there and you're part of a fintech, you're part of an organization that's going out and swinging for the fences and doing partnerships with some of the biggest companies in the world, like leverage the network and leverage the experience of people who have been there and done that. And that was something that obviously, like what Brandon just shared with you guys, Brandon was willing to do that in a one-on-one with me and give me some really solid insights that helped our company progress through this process and get to where we are.
So everyone go to Brandon.
Great advice. Find him on Twitter.
His rates are very reasonable.
All right, so we talked about courtship, we talked about negotiation. Somebody flew to New York, they proposed, you get the ring, you're married. Let's talk about implementation. Any stories, lessons learned, challenges, opportunities that came up in that whole process for you?
Yeah, I think this is where I jump in, right? Because I mentioned I'm on the execution side. So they've gone through all of this great diligence. They've gone through their 30 meetings with all different people in my organization, which is just massively overwhelming to some degree, right? We have like 300,000 people that work there. So the right hand, the left hand never knows what the other is doing. So when this finally came to my table, I look at it and say, okay, now it's time to turn this around and make it into something. I know that the media has something, but what do I do with it? So that then begins the process of how do I integrate it into my network? How do I make this a thing for JPMorgan? And I think at that process, that's when you start saying, okay, how do I embed it in my implementation process? How do I hire the right people to have conversations with immediate on a regular basis, and yet try not to overwhelm them with our thousands of questions that we have. Really, and I think that you said that so eloquently. I was nodding my head here. We can unintentionally bury small companies, and it's not on purpose. It's just we're trying to perform our own due diligence and make sure that we are executing to the degree that is expected of us. But you're not staffed with 300,000 people like we are. So understanding that and taking that into account and trying to find a cadence that works for both parties and yet gives that mutually beneficial ability to communicate and drive towards success is really important. So that's kind of where we are now. It's early, but I feel like that was probably the biggest hurdle that we had to really make it through to make sure that we could then introduce it to the market.
I'll add one thing, again, to go back to a little bit about the diligence process, is going through this, you say this, we as an organization have to step up, right? We have to do the little things right. We have to get, if we're going to be successful in this partnership, all right, we did the job right to get the deal done, to get to marriage, right? You don't put it on cruise control once you're married. That's when you start to like really invest in getting to know your spouse even better, right? And continuing to court them and continuing to do all the right things and to get better and improve over time. And so for us, it's really challenged us to say we're going to go in and we're going to put the right operational framework and strategic plan, all the things that we know we've got to do, and then leveraging their experience. One of the things that Julie's done incredibly well is she went and pulled in a resource from a different division to say, hey, this individual has had a lot of success in managing other similar partnerships. We want to pull her in and make her the primary project manager. And then we match her up with someone on our team, and we do a weekly touch base as an organization, both organizations together, but then they're doing separate one-on-ones almost daily to make sure that we're tracking and moving forward in the right direction. And so I think there's a lot of that. Once you get it, you can't just kind of celebrate and go, all right, we're good, right? You got to get it, and you got to keep moving forward. You got to keep growing and keep getting better.
There goes that question about lessons learned. I think we really want to ask, though, are there any particular lessons learned about fostering a collaborative culture between different organizations, right? Partnerships or relationships. Relationships involve people. People will people. So let's talk about communication and any positive stories or maybe not so positive stories regarding that particular part of culture and partnerships.
Well, briefly, I think it starts with that relationship, right? And going and building that. When we signed our partnership, the first thing we did was we went to Julie's in Tampa. We went down and we spent some time and we sort of pulling in some of the relationship managers, and we spent an afternoon together. We did a happy hour together. We start really building those relationships so you can go out and ensure the partnership is successful. There's so much in life in general, right? But there's so much in business, especially in strategic partnerships, that really just comes down to the relationship. Knowing that you enjoy the people you work with, you know that they've got similar incentives for the success of the outcomes. Like those are all the things that you really want to understand. So I think that real big first thing is building the relationship. I'd love to hear from Brandon on the long term, like how, because you've done this again multiple times, like how you continue to keep that up with cadences and relationships. And sorry, I just took your kind of piece there.
It's okay, man.
Sorry.
-1 for you.
Yeah, I mean, back to your marriage analogy, continue to invest in it. Whether it's, a commercial relationship like we have with JPMorgan Chase, or whether it's an investment relationship like we have with Truist, it's just those continual touch points. Whether it's Christina and I being on this panel together, she did an amazing event at Money 2020 last year where we got to have some really good conversations, not only with people at the bank, but other people in the industry and other partners that Truist was working with. There's just these continual touch points, not just about the thing in front of you all the time, but about kind of broader opportunities. You really become a trusted advisor to this company that invested in you, whether that be from a commercial or a capital perspective. And so continuing to foster that, vendor relationship into a true partnership, I think is something that's really key. That's one. The other one, if you're familiar, there's a quote, or I don't know, it's hand-line razor is the concept, and it's basically that don't attribute to malice what can be explained through ignorance. And when I teach this to all of my junior account managers when they come in, but the basic idea is it's really easy when a big company is putting a bunch of pressure on you to be like, oh man, they're jerks. They're just trying to blame us for the fact that this thing went wrong. Vast majority of the time, it's just easier for us because we're the expert on our product, not the partner. And because we have 300, 400, 500 people to navigate, not 300,000 people to navigate, for us to find an easier answer. So, don't approach that pressure. They're under a lot of pressure. They're not trying to make you look bad. They're not trying to, scuttle the partnership. They're just trying to get an answer. And so if you can approach from a position of understanding that this isn't malice, it's probably ignorance of what even the bigger picture is. They just got yelled at from someone who got yelled at from someone above them. They got yelled at someone from a different organization. And if you go from a place of, they probably don't even know what they're doing, but I'm here to help, the relationship will be a raving success. And that's really hard to do when you're talking about the engineering department, that, their goal is to be perfect, to not have bugs, to not have release issues. And so, you've got a partner effectively calling their baby ugly, saying, that thing that you gave us is broken, or, it doesn't work, it didn't meet this requirement. That may not be the case. That was something that someone told someone, and now you're receiving it, and it's just your job to help them navigate the problem.
As we wrap up, I'd love to take questions from the audience in a few minutes, but I want to ask Christina and Julie, any advice that you might have for fintechs in the audience who might be exploring partnership opportunities with financial institutions?
I'm gonna say a little bit of what Brandon said. Actually, we talk a lot on our team about assuming good intent, and I think that's a really good approach just to have, whether you're dealing with people internally or externally, but especially with partnerships. Just assume that everyone is trying to do the best thing for everyone, and go into your negotiations and interactions that way, and find an advocate. Your first entry point into an organization, you may spend 6 months, a year, trying to build that relationship, and it's just you're hitting a brick wall. Try something else. You will eventually find that right person somewhere who wants to champion what you're doing and bring it to the right people that you may not even know about. And that may be through someone like myself. It may be someone on an execution team. It may be somebody that you meet in an event. But just be open to having lots of potential entry points into an organization, and find the one that has the best sort of match with your personality and your culture at your company.
I agree wholeheartedly, and with what Brandon said. I can attest, I have been in that position with someone yelling at me because someone was yelling at them. We don't always know the core of what's happening, but we want to be educated in it. So my biggest piece of advice is to respect your boundaries, because we can unintentionally put that burden on you, and it's not intentional. Thank you for saying that. It's truly not, but you can feel it, and just understand, there's pressure from all sides. So know where your boundaries are, and feel comfortable saying you'll get back to them, or whatever you need to say. That's the biggest piece, because I have seen large FIs partner with smaller fintechs and just unintentionally overwhelm them to the point that it puts them out of business because it damages their brand. And you don't want that to happen to all of your great work in your company, right? We're here to be your partner. Don't let us suffocate your innovation.
That's great advice. All right, any questions in the room? There's one question right there. Go ahead.
Hi,
The question was, is there anything we would have done differently, even though our outcome is wonderful? For us, I don't think so. I think there's, in any situation, you can look back and go, gosh, I wish we would have been hindsight, right? And so I do feel like we were very strategic about the things that we did and when we did it. I sat down early on and I was like, I tried to be empathetic, right? Like if I could put myself in their shoes, if I'm, one of the biggest banks in the world and I'm thinking about partnering with a company, what could a media do to differentiate themselves from everybody else? And then I take a step back and I look at our team and I look at our product and I look at the way we approach things. And I said, what are the things that makes me really proud of this organization? What are the ways that we win in other opportunities, like direct client opportunities? What are the things what are our strengths, right? How can we play to those strengths throughout this process? And one of those was, let's turn things around really quickly. I think a lot about like, in sales, from a sales perspective, if someone reaches out to you and they come to your website and they say, I'm interested, and it takes you 48 hours to get back in touch with them to schedule a meeting, you're kind of telling them that if you ever partner with us or if you ever decide to work with us, you think it's okay to respond within 48 hours. I can tell you that our support team has a first human touch within 12 minutes, right? So if a lead comes in, I want to make sure that people know, hey, if we're going to respond to support tickets for your employees within 12 minutes, we're going to reply to your initial outreach to us pretty quickly, ideally in less than 12 minutes, right? And so we thought a lot about that through this partnership process and this evaluation process to say, all right, if they come to us, even if it's on a Friday afternoon at 3, I'm not saying they did this, but if they came to us a Friday afternoon at 3 and said, we've got some technical questions, we're going to go, hey, who on the team from a technical perspective can hop on a call before 5 p.m. today and get this knocked out?
No, do it next week.
You can totally do it. We'll tackle it, right? And we would respond and we would go, hey, Jason can talk right now. And 9 times out of 10, they go, hey, it's okay, we can do this on Monday. But we would do it because we wanted to show them that this was that important to us and that was the kind of service that this partnership was going to get post-contract execution, right? And so I do feel like there were some things, like in hindsight, there's some things we probably could have tweaked, but a lot of it was just being, and each process is going to be different, and every organization is going to be different. You all have different strengths, right? But to understand what those are and then really stay true to that throughout the process.
I have a new goal now. I want to respond to my emails within 12 minutes.
I've learned this because I've messed it up in the past. It's been fairly successful at Greenlight, knock on wood, but I would say don't be afraid to ask for what you need. It's really easy when you're chasing this like big deal opportunity that's going to change the trajectory of your company to get tied up in that and like rush towards potential failure, right? But slowing down and thinking and asking smart questions and being willing to be a little bit transparent about what it is you need as a company and what you're going to need as a company when you scale from 0 to 5 when you launch a massive financial institution partner overnight, because you will find out that mistakes made in the past. The revenue model that we landed on actually isn't relevant when I'm a growth stage company anymore. I didn't consider the amount of FTEs that I was going to need to actually support this thing. I didn't understand that diligence requirement actually happens every year. And I've got auditors flying in and spending a week with me, and there's a laundry list of things that I have to fix coming out of that every year. There's just so many of those things, and so asking questions about the process, and then based off of those responses, asking for what you need, because if they're going to partner with you, they want you to be successful and they want you to meet their standard. And in most cases, like they will help you navigate that, or they will come up with revenue models or that sort of thing that will help support your growth because they want to grow.
The annual due diligence check is called anniversary. That's what that is. All right, any other questions?
So going back to the early stages of product development, did you have the opportunity to engage with any large institutions as you were thinking through your product? And if so, what was that process like? How do you do that efficiently and maybe for
feel like Matt and I have talked enough, so I'm going to hand this one off and look for that. Yeah, Matt.
That's a great question. I think having a clear sense of what it is that you are trying to get feedback on is helpful. Not just saying, hey, I just love to generally talk with somebody and get their feedback about my product. Like that's probably not going to be a great use of everybody's time. But if you say, you know what, we're really struggling with this compliance issue and like can't figure it out. Do you have someone in compliance who has some specialty in this who I can talk to? I think the more specificity you can bring to the request, the more helpful it's going to be to you, and the better, whoever you're speaking with can navigate to someone who can actually be helpful.
Yeah, exactly, and I think it also depends on where you are in your journey. How do you navigate a firm like mine, or I'm sure like Truist as well, to understand who to reach out to and ask those questions to? You can find one inroad that doesn't necessarily bring you to whom you need to go to. So I find that may be difficult. We do offer incubator services, but that's another vetting process to get through. And I mean, it's there, it's open to fintechs. But I think that may be a little bit challenging unless you know someone or know specifically where you're looking to get to.
I'll jump into real quick. The 0 to 1 stage, right? From like, what's the first product gonna look like? I think a lot of it is finding people that are in that very next phase, or someone who's still relatively close to that. You go, what were some of the early mistakes you made from a product perspective that we should make sure we tighten up? And then to kind of the point is seeking out people. If you know, what's the old quote? I think it was from The Wizard of Oz. If you don't know where you're going, any road will get you there, right? To kind of have this vision of where you want to go, and then seek out people that are there that can help you kind of work backwards. I can say Chris Stanley was one of those guys for us. We had 14 banks tell us, no, we're not going to partner with you, because they thought we were a payday lender. And I could tell them all, we're trying to put payday lenders out of business. We're a responsible alternative to that, but they didn't want to hear it. And then I got that guy, Chris Stanley, to come in and gave us an opportunity to come pitch to him and ask to partner with them as a bank for our first payment rails. And not only did he didn't say yes initially, it took a little time, but he spent 30 minutes, over the 30 minutes that he gave us, whiteboarding out the way he thought this should work. And that is finding somebody who's been there, someone who has some expertise, that's willing to spend time with you as a bunch of nobodies, right? It was me with an idea and another guy, CTO, who's full-time somewhere else doing nights and weekends, and he gave us time to come in. So I think it's kind of like Brandon's earlier points, asking, like, don't be afraid to ask. Back to getting told no a lot, don't be afraid to get told no. Every no gets you closer to a yes, right? I could have given up at 12 banks and just said, you know what, I'm just going to keep working for another company instead of chasing this entrepreneurial dream. And instead, we kept going, and we finally found somebody that helped us get this product off on the right footing, and then continue to build over time. And we're always going. Now we have JPMorgan that's helping us with product roadmap and telling us things that they think we should do, and what their clients, corporate clients and retail clients, are telling them they need. And that's just super helpful. So to me, it's always about knowing where you're going and then kind of backing into what we need to do today to get there.
Great, we have 1 minute left. So I'd like to ask each person on the panel if you could share just one word of advice to fintech's founders in the audience moving forward.
I think it goes back to double click on what I said previously and what Christina echoed around not assuming Valentine. It's so easy to do when the size and scale of the organizations and the strategic priorities is the biggest thing that you've got going as the fintech, and it is, not even going to be a line item on an income statement at one of these large FIs. So not assuming the malintent that's kind of tied up in all of those disparities is absolutely crucial in every step of the way.
So you want one word?
3 words.
Try again.
Okay, well, I think you said one word, but I guess I would say persevere. Don't let the man get you down.
That's fine. Yeah, I'm gonna double down on that one, yeah.
Mine would go back to what I said earlier, just know your strengths. Like, stay true to yourself. And I think if you do that, you're gonna be in a good spot.
Well, let's give a round of applause to thank you very much for sharing your knowledge and your experience with us today. Good afternoon, everyone, and welcome to our banking innovation track. My name is Stephanie Foster. I will be your MC this afternoon. I am the managing director for the ThinkTECH Accelerator at the ICBA, the Independent Community Bankers of America. Welcome. I'll go ahead and introduce our next session. So the panel title is Accelerating Digital Transformation in Banking, What Leading FIs Are Doing to Keep Pace and Harness the Latest Technologies. And we have 5 amazing panelists here. Kattia, Sigui, Chief Operating Officer of Maast. I'm still going to butcher your name, I'm so sorry. Aloke, Agarwal, the Director of Cloud Innovation and Engineering at PwC. Steve Riddick, VP Client Success at Visa. John Jenkins, former Chief Technology Officer at Western Alliance Bank. And Lane Martin, Principal at PwC. I'll go ahead and hand it over to our moderator.
Great, thank you so much. It's nice to see you guys today. Welcome to Fintech South and this panel. This is going to be a good conversation, a deep one and a fast-moving one. That was the intent. This war bunker that we're in can get a little sleepy. So we're trying to be a little bit faster when we think about addressing this topic today. And it's a tough one. So when we think about banks and how they have to keep pace with other suppliers of financial technology, pace is incredibly important. And so that's a very loaded term around pace because it involves people, it involves customers, it involves core systems, and the complexity of remaining compliant as you think about doing the development at scale. So today, as we walk through this dialogue, we are going to hit different elements that are involved in actually keeping pace, because you can't do it by focusing on one alone. Another thing is that we all know the challenges that exist with respect to things that don't go well in innovation. We know the constraints that are out there. So a lot of our dialogue here should be around what is it that we're doing to make the optic positive? What does good look like? What are people doing that's working as opposed to things that aren't working? So with me, we've got a great cross-functional panel here, and they've promised to interrupt each other and get in the middle of all of the complexity, but also some of the success that comes around doing this right. So if we could key forward, the first thing, when we think about banking innovation and accelerating transformation, commoditization is out there, right? Commoditization of products. And when we think about the nuance of what is changing, it all revolves around differentiation and a strategy that makes one different from another. So Kattia, I want to come to you first around, what are banks doing to actually differentiate from a strategic perspective?
Absolutely, and for context, I work at Maast. It's a wholly owned subsidiary of Synovus Bank. Maast offers an embedded finance platform for business software providers that they can embed and offer as their own to their users. So for us, we had a very humbling realization that banking activities are absolutely necessary, but banks are absolutely not. And that there was a trend where the banks are being disintermediated from their end user. In our case, our small business owner, that is our bread and butter. And it took for us to have an internal discussion of what is it that we do really well at the bank that follows that trend, that allows us to be present, even if in the background, for our customers. What we do really well at the bank, we had a merchant services operation team that's magnificent. We were one of the few banks that are offering sponsorship in the US. So we combine those and say, hey, let's differentiate ourselves by using what we do really well and create a new way to reach our customers through a new product, through a new way that is familiar to them, that keeps up with the times and reduces the stress and the challenges that they face every day. So if I can condense it, it would be like, realize that what you do is important, but that is changing, and that we have to take a look into the banking operations to understand what you're good at, to keep at your core what your core competencies are, and to ensure that you're translating that into environments that are usable to your end user.
And customers, end users, customers, all these banks have different focus areas with respect to those customers and catering to their needs in a way that's effective both now, but in terms of times changing. Steve, I think we'll come to you next. From a Visa perspective and from your own background, the importance of catering to the customer, what sort of lessons do you have to share with the team?
Yeah, Dave, no, appreciate it. So I guess one of the things I go back to is the shareholder's letter that Jeff Bezos wrote, and he said that customers are always beautifully and wonderfully dissatisfied. Even when you give them what they want, they always want something else. And you think about it. I mean, each of us, we've had, you get an iPhone, you get something like that, and you're like, oh my goodness, this is a brand new iPhone. I love it, but I wish it did this, and I wish it did that, and I wish it did that. And that's the reality that we're at with our customers. That's the reality with the times that are changing, the expectations that our customers are having are ever evolving, and the speed in which they're evolving right now is faster than any of us can really keep up with. So gone are the days where it's and this is kind of back to what Kattia was saying, gone are the days where you try to be everything for everyone. Now you figure out what are your core competencies, and then you wrap someone else's services a lot of times into it so that now you can deliver that best in class. Specific to customers, I think one of the things that we're seeing that a lot of players are doing here that we work with, it's things like the whole test and learn sort of concept. The ability of, it used to be that if you wanted to get some feedback from a customer, you got a focus group, you sent out a survey, you did all these little random things, but the speed that you got that feedback back now is just too slow. And so now what we're seeing is that FIs are intentionally building their products, building their services, building whatever it is that they have with the capabilities that actually capture certain data immediately in real time. Then with the use of things like machine learning and artificial intelligence and things like that, you're able to take all that data, whereas before it was just too much for us to get through. Now you can take all that data and very quickly implement the learnings and things like that so that you can now see a difference. But it has to be an ever going, ongoing kind of evolution of how you think about what testing means, what testing and learning means, what trying things out, what seeing new things, and making sure that you have the data actually embedded in it so that you're constantly getting those insights.
And I would say that banks that are doing this quite well have actually embedded those lessons right alongside and within product delivery mechanisms. So when we think about software development and running things by customer group to capture their requirements at the onset, test them alpha, beta, test them in front of rolling them into production, there's a lot of feedback that actually eliminates pushback when things go live. When we think about the infrastructure though, so most everyone here, I'm sure, is well aware of the complexity and the siloed nature of a lot of complex financial institutions and the fact that they run on different platforms. Some are homegrown, some are vendor provided. All of them run on different contract cycles. They all run on different delivery mechanisms based off what's in the contracts. So I guess, John, we'll come to you from a CTO perspective around both when we think about, one, the infrastructure that exists, but two, kind of the software delivery approaches that we've seen work well around how to accommodate that strange and complex dynamic that we have to overcome in order to deliver things quickly.
I'm sure most of you guys are aware, the larger financial institutions in the U.S. and around the world, the infrastructure they're running, it's still based on technology from the 70s. People still struggling to find COBOL developers to keep up with systems like Hogan. So when you think about migrating millions and millions of customers with hundreds of different varieties of products that's been developed over the past 30 years, it gets complex really quick. So some of the challenges are, now you've got SaaS providers, so you end up with data center products, you have SaaS providers, and all the connectivity in between. So when you think about migrating to a cloud or getting into something more modern, it becomes complex really fast because now you're having one center talk to another center, going over the internet. Security comes into play, latency, all of these things. And years ago, and I say year meaning less than 8 years ago, that was still kind of the case. Today, we're starting to see a lot more with fintechs and other emerging technologies coming to market, pre-built systems. So core banking platforms that have open APIs for very independent, easy to plug and play, easy compared to what I've seen in the past, and stand up new solutions that will allow us to get to better products faster. If you have to go back and go through Hogan system and program, some kind of product, it can take a long time. So I feel like the technologies we have now are probably at the peak of making it easier for banks to embrace change and actually move from some of these legacy platforms to the cloud relatively fast. And before it was years and $50, $100 million easily to move a core system. Now it's weeks and months with the right vendors.
If I can give an example, and I don't know if it's the right one, we're testing it. For Maast, we decided to stay away from the Synovus legacy systems and start something completely new. I don't know if that's going to hurt us at the end, but it allows us to be quick, to be nimble, and to test and learn. Back to that scenario.
Well, I would say the scenario at Maast is somewhat similar to the scenario back early in your career when thinking about using new platforms as basically launch pads to harness innovation and try things differently, try different development methodologies in a protected space to address new customers as opposed to doing all the innovation on a large institution basis, knowing that you always have ways to impact an existing customer base, which makes you more risk averse around doing things and bringing things to market to disrupt what's there now. There have been some tactics taken, and I've seen them personally, and I'll build them personally around, let's start something new, address a new customer base, or go out of market with a brand new core platform, API-driven, cloud-based native solution, where our risk in terms of messing up our existing environment is very much mitigated. And so you can prove out and get more assurance from a risk perspective that this indeed does work, it delivers functionality that customers do like, and we can then broaden it to include what happens long-term with our legacy financial institution and provides a migration path. And that might be similar. Do you want to talk through that at Maast in terms of, is that a similar mindset around how Maast is operating?
It is. The concept of failing fast, I know we say it. Sometimes it's hard to implement at a bank, right? But we are trying to embrace the idea that if we're going to fail, let's fail in an environment where we can correct easily. We're not saying that the legacy systems are wrong, but we're competing against resources if we use our legacy system. We're competing resources in terms of people, technology, money, investment dollars. The idea is, what can we do in this protected environment that will allow us to fail without a lot of consequence at the bank? We will have regulators that are looking at our activities and ensure that if we fail and learn, that it could be applied to other areas of the bank.
Very good. So can we talk, Steve, when we get in there?
So one thing, yeah, agreed. So I think at Visa, one of the things that we're really focused on is, a lot of it's kind of, everyone's saying innovation labs and things like that, and we all have some version of it. But to this point, one of the things that we're really doing is starting to build within these innovation labs, and what comes out of that, we immediately bring to market certain capabilities and products, but we may do it in a smaller market, a market where, to your point, it's much more controlled. It's actually live. We're actually getting true impact and getting true feedback and things like that. But by doing that, whether it's a smaller market, geographical market, whether it's a smaller country, whatever the case may be, whether it's just a kind of a friends and family sort of scaling of that, whatever the case may be. But it's, I can't stress enough, the way that we've done things is simply not fast enough. And I mean, as a banking industry, as a payments industry, it's not going to keep up with the demands that customers have now.
Just to add to that, I think through the rapid change, you're only as fast as your weak point. So if you have one slow piece in the process, you're not going to ever be fast. As we think about the infrastructure and getting to these technologies, in the past you had to order circuits that took 60, 90 days. You had to provision all this equipment. That's all gone. With the cloud, you can stand up and really provision a system within minutes. It's that fast. The impediment really becomes around regulations, compliance, and the legal team getting in front of you going, hey, you did it kind of quick. I want to make sure that it's going to be secure and I'm not going to be on the news tomorrow, right? So, having a good process in place and having your stakeholders up in the beginning early as far as what advantage of that is one. Also, just to add to the fail fast, being able to stand up a second core, let's say, and test a product. Everything nowadays is real time, right? Everybody wants the real time, the payments, the settlements, the whole bit. You can quickly stand up a solution and, to Steve's point, pick small groups of friends and family and prove out a product. But that also does something else. You've also now set up and established basically the infrastructure you need to start migrating products. So you have a path forward now to get some of the other checking, savings, CDs, et cetera, that you want to start moving over towards those platforms. So it's kind of a double win. You get to test the waters a bit in a safe environment, and once it's worked out, then you now have an infrastructure ready built to take on new products.
And then along those lines, how important is consensus around the project delivery mechanism? So as a consultant, we've done a lot of work around agile transformation in terms of embedding more modern delivery tactics within the market to help companies move faster, bring customers into the delivery process. But at the end of the day, there's still largely annual budget cycles, gating mechanisms where risk reg and compliance can only review within this particular window, so you might be spreading away, but then you hit into a wall of compliance before anything could go to production. Any lessons learned from the panel around that and what you've seen that's worked well?
Yeah, I'll kind of tie it into some of the infrastructure as well. I guess quickly, how many people have Agile in the organization? How many have Waterfall? Lots, so to say, hands. So the challenge is with Agile is it works really well until PMOs and others come in and say, well, I want sign-off, I want this, and now you're going backwards and defeat the purpose of Agile. They want to know what the requirements are, what are you going to build, how much it's going to cost, which is not Agile, right? So I think the companies that are successful have figured out how to let their development teams or pockets of developers or what have you develop in an agile methodology. Go build product, get it done quick, and then integrate it into some of the standard procedures that we would have in Waterfall. Meaning, I want a full security check, regression test, all the things that I want before, and sign off by all the stakeholders before we go to production. So Agile by itself, I think, is not going to solve the problem. It's not a methodology for everything. It also is tied to your CI/CD, continuous integration, continuous development. If your development team doesn't have the tools and technologies to develop quick and move it, then Agile just sits on top of another slow process. So there's a couple of things that really have to click. I've seen it done really well. I've heard it called Agile, lots of different terms and things like that. But I don't really see a lot of financial institutions going full Agile where development straight through production in the same day. In a public startup company, they're building off new platforms, they're building off new technologies. They have the luxury to do that, and an Uber or an Airbnb. They also aren't financial institutions, right? So they don't have to worry about the feds coming in and shutting them down. But I think there's a good mix of having Agile with Waterfall that gives the banks the control and gives them the flexibility to build really quick if done right.
That is exactly what we have done at Maast. And I think I offend everybody when we say that we have Agile because it's not. It's like a mixture of things. In our experience, bringing in the support teams has been also challenging. Support teams audit, compliance, ESA, ML, regulators. And it's really painful, but it's good advice to invest upfront in creating your vision. And sometimes you want to keep it to a small group, right, so that you can control it. But the more they know about it, the more they understand, the more that they can see it, they can start building with you a roadmap. I know regulations are black and white, but maybe if you create a roadmap of how you're going to get to the regulation, that buys you some time. So a best practice is, even if you don't want to, try to involve your compliance, ESA, AML regulators upfront in the concept so that you get some time.
So to that point as well is one of the things that I've seen work incredibly well is when you bring some of those players, some of those groups in up front, you set up certain guiding principles, and then you specifically make sure that that there's, whether it's the number of people that can be on the product, whether it's the amount of different countries, different cities, whatever, but you put certain guiding principles in place, and then you just let the team go. Because as long as they're adhering to those guiding principles and not getting over a certain point of scale, then they're good. But then once they're ready to truly scale it, that's when there's a much more thorough analysis that comes in. You're bringing all the players, and it is going to slow it down, right? I mean, at Visa, we don't want to be on the front page of the Wall Street Journal for the wrong reason, right? So, and no FI does, no one up here does. So there's a reason to be able to slow it down. But I think by putting some of those, I mean, it's slow to get to those guiding principles, I promise you. But by putting some of those things in place up front, it just it gives you a little bit of leeway to be able to get certain things done quicker.
So along those lines, we have operations up here as a critical element. So operations basically brings operational requirements up front into the customer design piece so that operationally the back office is equipped to do what they need to do with the information provided when it's designed properly at the onset. That can also create a dynamic where operationally, when you're bringing something new to the forefront, the operations people like to default to the process that works well and mitigates risk. And here's the why. So, like, when we think about those that are doing this well, how are they including operations in some of these back office groups within the product delivery process?
Yeah, I mean, the quick and dirty answer is many of them aren't. And so that's where you end up having products or services that are broken, that you spend more time trying to support them after they've been in production versus, you know, the fraction of a portion of time if you would have done some of that in the front end. The easiest way to do it, I mean, it goes, I still would go back to the guiding principles. Everyone has to move a little bit out of their comfort zone. The ops team, I mean, I'm part of client success. We're part of that whole operations world within Visa. So the ops team has to feel a little bit more comfortable being uncomfortable. And then the product team has to be able to say, hey, we can't be as willy-nilly. We need to likewise remember that at some point, someone may want reporting on this, or someone may want to, we may have an audit and we need to be able to produce something. So everyone has to go a little bit out of their comfort zone to get to that sweet spot. But I think it's more of that balance where I don't think there's a set in stone right way. You just kind of have to get to that sweet spot based on specifically your business, your FI, and the stakeholders associated.
I agree with that, and even if you're intentional, you still fail. In the effort to go to market very fast, I'm sure you all have a lot of workarounds, manual process that become permanent. Just because you didn't have the time or the energy or you just needed to move fast. But fixing those issues is costing us time now. So yes, people are going to get uncomfortable. You have to have great leadership in negotiating the organizational components of the bank. In my case, the cultural components of the different backgrounds that you're bringing in, and it becomes less about technology and more about the social components of what make it work.
That leads us to partnerships, which is another critical element here around viewing the term partners goes beyond partners in the traditional sense could be your software providers, it could be your system integrators. What sort of elements within partnerships do you guys see as defining characteristics for success? In my vantage point, I've seen a lot of times in industry right now, most banks are thinking through IT rationalization. So they offer one of many things that they have everything, it doesn't work anywhere, but they've got it all to offer, right? You've got 5 different payment products within the bank, and none of them talk to each other. How do we sort that out? How do we actually rationalize on fewer vendors that provide the same functionality across more lines of business to save money contractually, things like that. But I've seen the partnership vibe, the partnership professional services approach to here's a product versus here we are as partners coming to the table together is a huge defining characteristic around being selected versus not. So interested in your take on that.
Yeah, I'll start. I'll tell you, in the last probably 7-8 years, I've done a ton of cloud migrations, implementing projects like blockchain. The challenge with our internal staff that I've always had is they think the same. So it's great. You've got people who know where their bodies are. They know the ins and outs of the system. But maybe they're not as in tune to what a cloud-native solution looks like. So as they start to migrate to cloud solutions, they build solutions like they would in a data center. So you lose the advantage of going to cloud. You don't get the serverless things. You don't get the elasticity. You don't get all the benefits that you want. So partnering with a good integrator who understands that, they can help kind of navigate the waters, even down to helping you pick the right sizes of the environments that you need through the cloud. It can save millions of dollars. I always think that being in the financial services space, especially, having a partner that understands our rules and regulations is key, because they can immediately tell you, that's a flag, I wouldn't go down that route, and save you some time from, going down something to find out later that, it's just completely not gonna work. But to Lane's point, I think getting a team that feels like they're part of the team, it's not someone here to tell us what to do, has been several challenges I've overcome. And once the team start to realize, they're here to help elevate our game as we, go through this journey together, we're going to be the ones supporting it. We're going to be certified. We're going to have the knowledge. These guys aren't here to take over their job. It made the process a lot easier, but it's extremely important to find folks that have done it and understand, because it's going to save you so much time and effort in the long run. It's just unfortunate, because I like to bring my team along, but you can't shove 10 years experience in a 2-week training class, unfortunately. Right? So having some leaders that can help is, I think, critical to success.
For us, partnership is a little bit different, right? It's the fintech world versus the banking world. That there's obviously ways that we can work together, but culturally, just think about vendor management and vendor due diligence, right? How do I onboard a software provider in a bank environment where something they don't even understand are people that are doing those things, right? So setting expectations was really important. So building those relationships with our partners are providing the technology solutions and making them part of the journey. Because at the end of the day, we both learn from each other, right? And I know it's a little bit cliche, but that cultural alignment between technology and the banking world has been one of the biggest challenges, but one of the most rewarding journeys, right? As we see the teams working together in the same environment.
Yeah, the only thing I would add is, we're kind of in a season of business where we kind of have to go small to go big again. We're like, gone are the days, like we're just not, all of our organizations, Visa included, we're not good at everything we do. We're really good at some stuff. There's a lot of stuff, and I'm sure everyone out there, there's a lot of things that you do incredibly well. But each of you can think about an area of your business where, we're okay at it, but okay in this season is just not good enough. And so being able to align with some people that can bring that sort of expertise and capabilities and competence, it's going to raise your game, the game of you as an institution, of us as organizations as well. It's going to raise your game. It's going to enable you to actually get out there, get the customers what they need quicker, and actually keep up with the demand.
Excellent. Last session was about embedding fintech and some of the success around that. So I don't think we need to go too deep in that realm in this session. Message received from the last session. But moving forward, I think there are some things around, back to the infrastructure, back to some examples of what good looks like. Just the ability to move quickly, if we get back to that theme, which I think will come to you, around, you've done blockchain-based payment deployments in short order. So if you could just talk about that, like in terms of how did you approach it, how did you get it done so quickly, and what are some elements that this group can learn from those experiences?
Yeah, I think the key to the blockchain payment solution that I was part of and launched was keeping it simple, really. It's not making it overly complicated. Going back to his point, having stakeholders up front early, because it was payments, it was blockchain. The clients knew that everybody automatically said no, because they were afraid of it. Most folks, exactly. They hear blockchain, they think everything is Bitcoin, right? So they don't understand it's actually the technology. But some of the accelerators was having an agile team, having the infrastructure set up that allowed us to develop code really quick and get things out so that people could look at it and kind of touch and feel it and make it feel real, as opposed to waiting 6 months before they actually saw something. That was a critical piece. We did this entire project in less than 4 months, and the infrastructure being set up was weeks because of the cloud. Development was, again, weeks because of open APIs. And then using SaaS products, right? Pick products that work, that are in the industry, don't reinvent the wheel. There's managed services out there through for Ethereum networks, et cetera, that allow you to build and scale these type of solutions really quick. And honestly, when I hear blockchain projects, people think, it's huge, it's complex. Almost everyone I've been in, it's probably 15% of the work is blockchain. The rest of it's just your regular software development. You got to build the screens and interactions and other stuff. So It really isn't as complicated as a lot of folks make it. Picking good vendors that already had infrastructure that we could tap into, and an integrator that we're working with that allows us to navigate some of the political waters that made the difference.
That's excellent. So everyone's wondering what Aloke has been doing up in this panel. Other than just saying he's listening intently, so he's a great listener. Thanks for being here, Aloke. Jokes aside, so at PwC we do a lot of transformation within banking, and we help take all of these lessons that we talked about today. So, if we're answering the exam question, which is what are leading FIs doing to keep pace with harnessing new technologies and remaining relevant, they're doing all of these things. Every piece of this is a part of what you must do to remain relevant, to keep pace. You got to sort these things out. At PwC, dun, 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 we actually have created a tool set. So we haven't talked about tools and accelerators, but we wanted to show you guys this. And it's not that you need to use PwC for this stuff, but you should. Saying there are a bunch of ways to actually bypass some of the landmines that exist, right? When we think about core modernization, which literally in today's client context that comes up every meeting, like what are we going to do about our core? Well, at PwC we have 4 modern cores up running in our industry cloud. So if you need to do a selection, talk to us. But the point is we have these running and we've built out technology in order for us to be able to prove what are the differences between the cores. What is it that we can stand up and offer a product in a short, agile sprint process to actually build something really rapidly. And as a result of that, what I wanted to do is have Aloke show you guys just this mentality around using acceleration to really springboard innovation. Because you can bypass and you can isolate your risk and you can test and learn in a way that's safe and see remarkable results quickly using these sort of approaches. So, Aloke, you want to talk through some of the things?
Sounds good. So what we've heard from clients is everything that the panelists have talked about, which is they want to do payments modernization, they want to do core modernization, digital modernization. We're standing up a whole digital bank, right, side by side, like Maast has done with some of this account you talked about. And so the accelerator we built, Industry Cloud for Banking, allows you to do all of that. And so we've done that through working with our leading vendors that Lane reference around the core banking platforms and modern cores. You can have multiple cores running side by side forever, or just while you're trying to migrate from a legacy to a modern core. We've got agile methodologies. We can support you transitioning from waterfall to agile. We've got CI/CD pipeline. All of that is in place. So we'll do something a little different. If you can play the video. So the Wi-Fi in here is not great, so we're just going to do a video of a demo. So this is our Industry Cloud for Banking offering. Just logging in, and it's logging in, connecting through Okta to do the authentication. And then what you'll see in a second here is it's loading accounts. And if you can pause the video for a second, once it loads, just play one more time. It's loading those accounts, if you pause here, from multiple cores. So this is in real time pulling accounts from 2 different cores. We can transfer money between the 2 without going outside the bank's payment rails, and then settle to the general ledger as well. So if we keep playing the video, what we'll focus on is just this money movement experience that we've built. So we're going to take money from Richard's checking account, and we're going to send that money, if you keep playing, you can send up to money up to 10 beneficiaries of the same transaction. So we're going to send money to Alan and David in this case. We can do domestic and international within the same transaction. And what we've done is a different experience where once I type in the $150, it'll intelligently recommend the fastest and most affordable way to send that money. And if it was a larger amount, it'll tell you that it was just ACH or wires. You can also split the payment up between 2 different payment rails. If it was a larger amount, it would make more sense. But in the purpose of a demo, that's what we're doing here. We've got FedNow in place, so RTP, FedNow, ACH, wires, SWIFT, all of that is in place. So now I'm going to review the transaction. It's going to allow me to edit if I needed to. And when I hit approve, what it's actually doing is it's going to make a real-time call through our payment hub, a partner that we're working with, to send out that RTP, and in this case, a FedNow transaction, and also debit it from the core. And all of that is happening through an integration layer that we've created called Cloud Intelligence Platform. So it's a no-code integration platform that allows you to easily integrate with new or existing systems. And this is the front end for it. One of the things, and there's a lot to it, so we're not going to demo everything, of course, but one of the things it allows you to do is through the observability dashboard, see the transaction that I just executed in real time. So your operations team, your developers have tons of access to all the events that have taken place in this event-based tool to process those transactions. So you can see it in a visual way as well through this flow view. So you can see all the events that are processed and follow it through the entire transaction. Your developers would love this because the developers have access to all this data in real time as the system is working. Next, we'll transition to, very quickly, the journey designers. So let's say you want to adjust your journeys in the money movement flow. Today, you got to pick up the phone, start a project to do a money movement change request. Well, tomorrow, your business team can go in here in this canvas and really just drag and drop new components onto the screen without making code changes. So if I want to now send an email to a customer, I can do that by just dragging and dropping that operation in. If I want to update my general ledger, settle my general ledger, I can just drag and drop that operation in as well. And then lastly, the confirmation screen. When I save this, it's actually saving this in real time to the servers. It's all cloud-based, so it's all cloud-native. We can target GCP, AWS, Azure, or a hybrid or a multi-cloud environment. But once that's saved, if we re-execute the transaction, you'll see a slight difference now in this new transaction. We're just going to do one beneficiary. You'll see that we're sending some money to Alan in this case. Again, we're going to send the dollars to him. I think it's through RTP in this case. And then it'll do the same transaction, but now it's going to execute those two additional steps so that it sends that email as well as does the general ledger update. No coding changes needed. So as we talked about earlier, from a pace perspective, it really helps you do this at a much faster pace and keep up with market demands at a much faster pace than you could in a traditional method. So that's our industry cloud for banking offering. As Lane said, you don't have to use PwC, but we've got it ready. It'll help you really accelerate any sort of journeys you're on for your transformation in a very quick manner. So it's up there.
Thank you.
We can pause the video. Thank you.
So, just wrapping this together, I think tools like that, the mentality to address the components that were listed on the prior slide, the commitment to innovation that ripples through the organization, those are the defining characteristics of keeping pace. I'd like to thank the panel. Thank you guys so much for being here. Appreciate it. If you guys have any questions, we can connect after this. Appreciate it.
Good afternoon, everyone, and welcome to the Banking Innovation Track. My name is Stephanie Foster. I'm the Managing Director of the ThinkTECH Accelerator at the ICBA, Independent Community Bankers of America. Welcome. Before we get started with our third and final panel of this track today, I would love to welcome our sponsor, Sensedia, to come up and say a few words. Natalia.
Thank you, everyone, for being here. I'm Natalia Cruz. I serve as the head of Open Finance at Sensedia, and Sensedia is sponsoring this track. So thank you so much for being with us and benefiting from the content that we brought for you. And Sensedia is a global company. We provide modern integration solutions. We are here with the booth number 36. We would love to welcome you and share a little bit of share some of our stories. We brought one of them for you right now. And there are a lot of news stories around fintechs and banks that we would love to share. So thank you so much.
Thank you, Natalia. All right, we're going to move on to our final panel of the day. The topic is why open is not a four-letter word in banking. What banks in the U.S. can learn from the rest of the world. And I'm going to introduce our three panelists. Natalia Cruz, she is the head of Open Finance at Sensedia. Filipe Torqueto, he's the head of U.S. Solutions Architect for Sensedia. And Eduardo Goni, the Oliveira, I'm not pronouncing that correctly. I speak French, not Spanish.
This is Rendimento is a Brazilian bank. It's pronounced Rendimento P. Thank you so much for the introductions. We are here today to share a story with you, an actual success story that we have with our customer Rendimento Pay. And since we've already been introduced, I would love to start with our questions. I have a little draft here. So Rendimento Pay is a fintech. It was born from Rendimento Bank, that it's a Brazilian bank. And with over 30 years in the market, Rendimento has been offering products and services focused in exchange, credit, investments, payment services, and solutions for individuals and enterprises in the middle market sector of Brazil and abroad. And from that success story, Rendimento Pay was born. And Eduardo Goni is here with us. He's the CEO of Rendimento Pay. And we've invited him to share a little bit of the stories. So I would love to start with you, Eduardo, and ask you if you can tell us a little bit about Rendimento Pay's initiatives and what have you been working on?
Perfect. Thank you, Natalia. Thank you, Fintech South, for the invitation, for being here, talking to all of you today, sharing some ideas and some things that we're doing in Brazil that might be helpful for the American market as well. So, as you well said, Rendimento Pay is a fintech. It's the fintech for Grupo Rendimento, who started 30 years ago with the bank. Rendimento is a middle market bank focused on B2B businesses. And we acquired lots of experience, mainly in currency exchange, service banking, providing bank as a service for other institutions, credit, investments, and we act mostly with partners and resellers, and we provide those services for institutions that not necessarily are financial institutions or payment institutions, but they want to provide those services to their customers, okay? And most of them, if not all of them, already integrated with us using APIs, which facilitates a lot the relationship. They can keep their own platform, just integrate to what we tell them to do and use fully our platform, okay? And Rendimento Pay has a few years ago. We started selling travel cards. We are the leaders in selling VTM cards, Visa Travel Money in Brazil, when prepaid cards were booming in Brazil. After that, we jumped to other kinds of prepaids, general purpose use, gift cards, and corporate cards, mainly focused on expense controls. And we also provide a treasury application for corporations that use our cards and make it easier for them to manage their expenses. We have evolved from that. Most recently, we started acting as acquirers as well. Is another thing that is booming in Brazil, the acquire market. But most recently, the star of the show for us is Riddick. Riddick is a platform that provides instant cross-border payment based on ThinkTECH technology. This is what we've been doing in the past 10 months, and it's growing exponentially. We can talk a little bit about that later. And I don't know if you have heard about ThinkTECH. ThinkTECH is the instant payment platform created by the Central Bank of Brazil in the year of 2020. It was launched in November 2020, and it has grown a lot in the past few years, and nowadays is the most used mean of payment in Brazil in terms of transaction. And we use that, created that as being an international thing, so that Brazilians can travel and use it abroad.
Yes, and the numbers are amazing. Brazilians have really adopted Pix, and it's a good alternative for plastic cards because of rates and taxes that we have in Brazil that are really, really high. So, since we are in Atlanta, and I hope I pronounced it correctly, according to Fintech Atlanta, there are more than 300 billion global payments transactions processed during last year, and in the state of Georgia. This state also has over 210 fintech companies and 6 of 10 largest US payment processing firms. So payments really are a relevant topic that we want to discuss here. And as Eduardo said, they have this solution called Jenkins, and I would love to explore how Jenkins works and what are the use cases, and if you, Eduardo, could share with us some of the results that you've already achieved.
Okay, perfect. Well, so Riddick is something very innovative, not only talking about Brazil, but I think globally, because we brought an instant payment solution, not considering the ones that we know as credit cards, debit cards, that are digital but not instant, right? So we brought it to be a cross-border tool for payments. And something important to mention that PIX was developed by the Central Bank of Brazil, but it's a local mean of payment. It's not cross-border in the essence. So the Central Bank of Brazil didn't evolve to a cross-border. We did it for Brazilians. And how does that work? It's the interesting point of that is as simple as scanning a QR code, pressing OK, or maybe dialing your password in your bank app. If you pay in Brazil, if you pay outside of Brazil using our platform, it's going to be the same thing. For example, let's imagine the picture, right? A Brazilian going abroad for business, for tourism. Let's take Argentina, for example, right? Country right beside us. They go to a store, they go to a restaurant, and they consume or they get the products they want, and they just tell the clerk or the cashier that they want to pay using PIX, right? So the clerk is going to get that information, is going to get in the platform, which is already connected to one of our local partners. We developed this tool using local partners, just like acquirers, payment gateways, payment institutions that can help us reach out to the retailers in the region. So they go to their own platform, which is already connected with us through an API. That's why I mentioned the API earlier. It's an important thing to make it easier for the connections. They select PIX as being the mean of payment decided by the customer and input the price in the local currency. So the screen is going to show the customer the price in local currency, the exchange rate, and the final price in reais, which is our currency in Brazil, right? So if the customer is okay with the numbers that they are showing in the screen, they say okay, they press enter, then the platform brings in the QR code for PIX, the original QR code from Brazil. We take it wherever we go with our platform. So as simple as in Brazil, they open their bank app, they scan the QR code, they press OK, and the payment is done. Okay, as simple as they are buying in their hometown. And then starts a new transaction behind that. We receive this instant payment, the PIX, in the name of the consumer. We transform it into an exchange transaction, and we send it to our partner in the local where the transaction is happening, maybe Argentina, Chile, United States, somewhere else. And this local partner is already connected to the bank account in the retailer. And so the payment is done in the local currency. Okay, so it's very simple. The consumer doesn't need to worry about it. They have everything in the palm of their hands with their apps, and as simple as they pay if they were in Brazil.
Perfect, Eduardo. Thank you. So Eduardo was mentioning APIs and how APIs help with all those strategies. And to relate to our title here, open APIs is a subject that really interests Sensedia and Rendimento to make it all possible to support that strategy. So I would love to ask you, Torqueto, our technical specialist at Sensedia, head of solutions here in the US, to explore a little bit how an API, a well-designed API strategy can support initiatives like open APIs, embedded finance, open banking. So could you help us to understand how it works?
Sure, and I will grab an example. I don't know if you guys watched the keynote presented by our CMO, Liz Arthur. So I'll take her example in my advantage, of course. So Legos, right? Well, everybody here knows Legos. So Eduardo was saying that the integration level and the amount of partners and stakeholders that we need to take an instant payment work, it's insane. Right? So we're talking about a currency exchange, we're talking about a partner in the local business, talking to retailers, we're talking about Rendimento itself, we're talking about banks and all other types of partners that we need to create this payment ecosystem and to work seamlessly to the user, right? So everything is possible, and everything is working behind the scenes because of APIs. Now, came to realize that the amount of APIs and the amount of work to be leveraged to put this sort of solution in place, right? So we take this in considerations in our platform. So Rendimento use our platform extensively, and they work in two ways, providing a very well-designed integration manner to their partners. So everybody here is using an app, right? Nobody needs a manual to use an app. So why not bring this experience to the API consumers, which is also the partners of Rendimento? So we want to bring this sort of experience for API consumers to create this embedded experience and seamless to the final user into reality. So we take very serious this developer experience that we need to develop, because this is our entrance point. This is actually where the business will grow. So now if Rendimento wants to go to another country, they have this entire ecosystem already set up and very well designed for their developers and their other partners in other countries to go out and consume and provide a service. What does that mean? Growth in two ways. To the partner of Rendimento, providing another service to Brazilians go there and shop like their local homes, and they provide Rendimento an obvious channel to grow even more, right? So imagine this Lego perspective taking place and growing and growing and growing. It's easy as taking a place, taking a piece of this Lego and put another. So it's exactly the type of experience that we want to leverage. And we talk a lot about API first. I don't know if you guys are very familiar with API context, but API first, not just I will design the API first. No, we are going to establish a business that makes sense on top of an integration to actually deliver those embedded solutions. Not only embedded finance, we can talk about embedded insurance and other stuff, but bringing to the use case, we're talking about an insanely complex use case across borders, different languages, different everything. So you guys can imagine the barriers between languages, developers, well, it's very hard to manage and turn it into a single language. We're talking about APIs, consumer, and that's it. So I can deliver a seamless experience to the end user, which is our goal, right? Nobody wants to get out of the app to get a payment. So I want the payment, right? So this is the final goal. This is the final game.
And what amazes me about that story is that how the connection between business and technology are enabled through this API strategy. So it's as simple as the documentation of that API related to payments and exchange and SWIFT operations being exposed to their partners and consumers through a developer portal, or I love to call it as a partner portal, and the consumption of this API is enabled. So simple like that. So considering that we are exploring the business side and the technical side, I would love to hear from both of you. What are the benefits that fintechs are already experiencing from those initiatives, technologies, and business initiatives that you guys are providing?
Well, that's a very good question. I think we should go back now, at this moment, to the title of the panel, which is, we talked about open is not a four-letter word, right? So it's not, it's much more than that. For me, it's inclusion. Why I say it's inclusion. For example, let's take, I described to you here one case of Riddick, the platform that we used, the technology from Pix. Pix was a boom in Brazil, and nobody believed it 2-3 years ago, because the Central Bank of Brazil told the financial institutions and the payment institutions and the payment schemes that we need your help to do it. If you don't do it, we're going to do it by ourselves. And they did it. Nobody believed it, nobody invested in it, but they had to because of the regulations. The results of that story is 71 million Brazilians included financially because of that, because they are in regions where they don't have fintechs, they don't have bank branches, they don't have how to withdraw money. So 71 million in a country where we have something around 220 million inhabitants. Okay, that's as big as that. We have nowadays more than 150 million transactions a day. And during the year of 2022, we moved more than 10 trillion reais with Pix, which is equivalent to $2 trillion and growing exponentially. Okay, so it's not only a four-letter word, it's an inclusion word. And what has it done for the open banking, I prefer to call open finance in Brazil? It has really included people, it has brought better offers, new product offers, it has created a discomfort zone in all of those institutions that were there, very quiet with their market reserve. So market reserve is over with the open platforms, with the open finance in Brazil. And the institutions started to think differently about the consumer. So they need to approach the consumer with new offers, with better offers. If not, that relationship may be lost forever. So this is good for the end user, for the consumer. So the market is shifting, bringing new opportunities, bringing competition, bringing new offers, and who benefits the most from that is the consumer, is the normal citizen, mainly the one that was not financial included yet, and now he is and has credit, has opportunities to know about finance, to get financial educated, and to start growing and be prepared to improve the country's economy. So it's not only a four-letter word.
So we're talking about open banking and open finance, a lot of open words, right? But here's the thing, use technology for inclusion, right? So we're talking about APIs and integrations, but okay, what exactly we are integrating? Right? So the end game is to use the platforms and the integrations that we have available, which can create an endless opportunity game for everybody, and include to the fintech world and for the community world. So we have a lot of use case popping, right? A lot of very good use case, including during the pandemic. Pix helped a lot in the payment for the people in Brazil to get their social payments, right? So we're talking about instant payment to help everybody that need money to survive during a pandemic session, right? So it's amazing to see how an open platform and how those open institutions and this sort of initiative like open banking can do in a community as a whole. And more than that, what sort of experience will arise in the near future with those integrations gain maturity level. Right? So we are gaining maturity, new integrations, new ideas are born every day, and we have AI on top of it as well. So what type of economy we are going to face 5 years from now, and what exactly we are going to embed, and what exactly will be the experience about the banking customer 5 years from now, adding APIs, integrations, and the AI on top of it. So we are seeing another revolution that will make another mess in the integration scenario. We need more integration, more APIs probably, but I would be amazed on what sort of use case that will pop up in the near future.
And amazing how we can explore the management of those business API products and how technology is transforming the way you guarantee performance, security, observability of all of those components that you create but just to support your business. So I'm curious, what comes next?
Well, technology speaking, like I said, I touched the point a little bit. We have AI on top of it, and we do have those experiences that we have way more and more. We're expecting way more from the apps that we use and from the technology that we use. Right? Nobody stopped by with the banking app waiting 10, 20 seconds for a transaction to be complete anymore. If we do, we are going to delete the app for sure. So we are way more grumpy, if I can use this word, using the apps today. So this sort of requirement and adding the AI revolution that is happening already can create an entire new economy based way more on the individual using and the individual experience. So it will be way more personalized. We are going to expect way more personalized experiences from apps, from digital scenarios, because this is what a data and an integrated world can bring to us. I don't want this generic perspective, right? We're going to expect a personalized experience from banks, from fintechs, from retailers, from everything. And like I said, it's going to add on top of technology mass. It's going to demand more and more and more integrations and more embedded businesses. So think about travel today. So I want to purchase my flight, my insurance, my hotel, and everything else in one platform. If I'm going to purchase a car, I don't want to purchase insurance in one place. I don't want to get the loan for another place and then go to the car retailer. I want to purchase a car. So those embedded business will grow, and the experience will be way worse in terms of the mass inside of the integration that we need. So this is what the future expected was, I think.
I guess the complexity, right, of the systems and how the user receives it, and for it to be the more transparent possible for the user, how we can connect those integrations to make it simpler for the user and the customer experience being improved and improved and improved. And what are your thoughts on this?
Well, on a business perspective, I can say that more speed on digitalization, right? So I think we all agree that after the pandemics or during the pandemics, digital payments have speeded up 10 years in less than one, and we are years ahead on what we imagined before the pandemics. I think not only in the States, globally, everywhere I go, everywhere I go, with whom I speak, they say the same thing, right? So, but it's going to speed up because there is no backwards, there is no coming back. People experienced more digitalized payments and they are not going back. The central banks are preparing the CBDCs, right? So it's a reality in Brazil. I think it's already a reality here in the States. So even the governments are moving in that direction. So every day we are stepping ahead, we're moving forward, and we're going to get more integrated. The platforms are going to be more open so that it can be easier for us to get integrated. So I'm talking to you about PIX, about Rendix. Several years ago, we talked about credit cards, debit cards. What are we going to talk in the years to come? So it's going to be much more speeded up, those things, right? So that's what I believe. Digital, always. And not competing with each other, complementing each other. For example, in Brazil, PIX competes mostly with cash, not with credit and debit cards.
And as we are talking now about PIX, I can imagine PIX being integrated somehow with Zelle, with Venmo, or when FedNow is have its pilot finished, and people are adopting those initiatives more and more. So I see the integration between them and how APIs will manage this complexity and help users to have access to it. So as I said in the beginning, we are in the booth number 36. We did bring some folders related to Rendix, the product that Eduardo just shared with you. They are there with Rachel, our friend that is leading this room discussion. I would love for you to have a folder, bring it with you, and we are available for you to ask questions and talk to us about this. Would love to thank everyone that is here for your attention and say that we are available for you guys now. And thank you so much for participating in this
Thank you, Vespa.
amazing discussion. It was super interesting.
Thank you, everybody.